Hey everyone, I'm here with Chris Lustrino from KingsCrowd and Tim from Alt. How we doing, gentlemen?
Outstanding.
Good.
Thanks for having me, guys.
Awesome. Good to see you again, man. It's been a while since we chatted, and you guys have come a long way. It's so great to see your progress, and can't wait to talk about this raise. I think the when you guys first started, it was kind of like the Bloomberg for private markets, or the Bloomberg for alternative investing. And now that you guys are starting to really kind of hit growth mode and hit your strides, I think what I'd love to talk about today is the acquisition side of things. So you guys have made some big acquisitions lately. Tell us all about it. What have you acquired and why?
So if you really look at, the last couple of years of our business, it was dialing in what are our revenue lines, right? How do we start to commercialize the data we've been creating, right? We've tracked and rated and provided analysis on 10,000 plus private companies, which is likely the largest financial database that's ever been built in the United States, right? Because no private companies have ever shared their financial data at scale. So the fact that we've built that, we saw that we had these different end customer segments coming to us. So the first one that we always started with was serving the consumer investor, right? The retail investor who's trying to navigate these markets, do their investment research and due diligence. That was our product one. And we started to find really good product market fit there a couple of years ago. But during that same period, we started having, the start engines, the we funders, the marketing agencies, the legal agencies reaching out to us. And they were all asking us the same questions. How can we utilize your data for market intelligence purposes or business development to know who else is raising in the space and who we can go after in terms of potential customers and so on and so forth, right? We realized there was this opportunity to really serve kind of the institutional segment, the industry players in our space. And we went, whoa, that's really interesting. We could start serving them. So we did. And we started figuring out exactly what their needs were and how we could serve them. And then the last one was we had tons of founders coming to our analysts and saying, hey, I'm thinking about doing a raise, but how should I structure it? Does it make sense for me to do a raise? Where would I list? How much could I raise? What should my valuation be? What's my budget need to be? And we realized, again, we had the answers for all of that. So it's become very clear to us over the last few years when we've focused on commercialization of our business is that we have three end segments. We have consumers, we have institutions, and we have founders. Those are the three segments that we can serve. And from that, we saw opportunities to start rolling up and acquiring companies in our space to be able to synergistically be able to serve all of those end customer segments with data-driven solutions. So our most recent acquisitions have really been focused on the founder advisory side of the business, where we're seeing really strong uptick. Happy to get into it, but I'll stop there.
The founder advisory stuff's really interesting because you're right. Like, you talk to all these companies that are raising on the Reg CF, Reg A platforms, and man, like I don't think they realize when they go to raise just how much like they just get dropped in the deep end, right? Like it's like
Mhm.
they kind of think that they're going to be handheld and like kind of it's not that's not the case. Like it's really up to
No.
them to handle not everything, but a lot of the work that goes into a successful raise. Like these platforms are kind of agnostic. They don't really provide those services. You guys, however, see an opportunity, and that's exactly what you're doing. Let's go through these acquisitions one by one because you got three of them I want to touch on. We've got Crowd Lustro or Lustro. We've got Raise Papers, and we've got most recent CrowdCheck. Should we start
Yep.
with Lustro? That was the first one, correct?
Well, actually, it was Raise Papers, so we'll start there. So when we're hearing all of these things on the street, right, from these founders, hey, we need help navigating these waters, and recognizing that one of the inaccessibilities of raising in Reg CF and Reg A plus is that it can be extremely expensive to get started, right? Needing lawyers and accountants and all of these things. And what we realized is that there was a way to start templatizing and creating software around the actual form filing and documentation process. And we had an opportunity to acquire a company that was in this space for many years called Law Cloud. We rebranded that as Raise Papers to be very clear about what we do. We help you with your Raise Papers. And we quite literally did that. We templatized through software the process of creating Form Cs, Form 1As, and Form Ds. And what that essentially means is before you can ever raise money in this space as a founder, you have to file those documents with the SEC. It's essentially you're offering documents that says we're legally allowed to do this and we've disclosed all the information you as an investor are entitled to by the rules of the SEC. It's a very complicated process. Trying to do it on your own, good luck. So
But
we
did,
created
did
this.
the platforms help with that today? This is what I want to understand. Like how much?
Only a couple do. So only a
Okay.
couple do, and really only one will actually do it for you. The others may provide a template, but they don't service you or help you go through it. And as many lawyers will tell you, if crap in, crap out, right? So if founders just go on there on their own and trying to answer questions they don't know the answers to, then the end product is really not very good. And there's all sorts of issues around the reporting interface that we're trying to help solve for. So our process is to have them use this software that we've built where they can quite literally go through in these templatized questionnaires with a paralegal who's gone through hundreds of these before and help them actually create that documentation. And then we partner with network attorneys, as we call them, who then review the final document before it gets submitted to the SEC and answers those more critical questions and make sure everything is in really good standing order for your investors. Now, what was so exciting about that for us is that many of the questions that founders are asking during that process are the most important ones. Well, what should my valuation be? What security type sells right now? Is it a safe? Is it a note? Is it a price round? How much should the price per share be to be attractive to investors? What should my minimum and maximum investment be? How much should I be looking to raise? These are all the questions that are database answers for them. So quite literally, we can help them figure out all of that stuff with our market comps and valuation tools that we've built specifically for founders. So we get to layer on the stuff. The lawyers will literally say, we have no idea. We're not in the market. We just help you create the form filing. We actually help you navigate and figure out what it is that you should do to structure your deal to be successful.
Yeah,
So
I love it. So it's like Reg A, Reg CF strategy essentially is what you guys are offering here.
exactly right. And we kind of won over the Reg CF space over the past couple of years because we provide an affordable, easy to use solution. Now, where we haven't won over customers is in the Reg A space. So Regulation A plus is pretty much what we call a mini IPO, right? You're not going public, but it's very much like going public. You have to be qualified by the SEC. You're going to have an examiner looking at your business filings, all of that. So it's very intense. The reality is that the platforms like Start Engine and WeFunder, they pretty much recommend all of their business to this firm called CrowdCheck. And the reason why they do that is because they trust them. These guys have been in the industry for 10, 12 plus years and have been the trusted go-to source for getting your Regulation A plus documents in order. They're the best in class. They're five of the smartest minds in our industry, five incredible lawyers who just know what they're doing, and they own that space. And we haven't been able to crack it because they're so good at it. And so that is the opportunity to acquire them and to get into the Reg A space, which are far more advanced clients, further upstream, higher end clients that, need way more hand holding and complexities and all of that. But what's so exciting is these guys are traditional, legal advisors, right? And now we're coming in and tech enabling the entire process. And for us, that's really, really exciting.
This is awesome, man. I love it. I think it's really well thought out. Clear focus on what you're doing, and it makes perfect sense. Now, when it comes to your raise, you guys are raising. How much are you raising on this raise here?
Yep. So it's a $2.5 million growth round. And we're raising right now. Actually, I guess I shouldn't say it since it's a Reg CF and I can't say the valuation.
It's all right. So you're going to raise $2.5 million. Now, where is that money going to be deployed? Where are you guys looking for more acquisitions? Are you looking to ramp up growth, sales? Tell us a little bit about how you're going to use the funds.
Heavy emphasis is going to be sales and marketing. We've never had an outside marketing agency helping us grow our consumer business. We've never spent really a dime on real marketing. We've employed a marketing agency. We've put the infrastructure in place, and we're pursuing our customer persona through
How
marketing on the
have you,
consumer
when you
side.
say growing the customer, are you talking about growing the supply side or the demand side or what?
Yeah, great question. So on our consumer retail investor side, right, we want to grow our subscription business. So we know who these folks are. They're 35 to 55-year-old individuals who make more than 100 grand a year, who are actively interested in investing in alternatives and tend to work in financial services. Like we know who these people are, but we're only reaching so many of them through organic, right? We need to burst through that door. And so now we're investing in, paid social, Google PMax, all of those types of things, and going after those specific personas to get more of them in the door. So we're growing our top of funnel on the consumer side. We've brought on our first director of sales at the beginning of the year who came from Start Engine, and I'm already seeing it. He's leading the founder advisory side of our business and is absolutely crushing it. Our sales are dramatically up year over year through the first 4 months of the year. And now guess what? He's taking that playbook that we've created for Raise Papers and applying it to the CrowdCheck acquisition because they have no CRM and no salesperson in place. It's all just been referrals. They've generated millions in sales every year just from referrals. So we're like, if we had a real client list and a CRM and a newsletter and can reach out to these people and manage these relationships, I can't even imagine what we can do. So we're investing in that, and then R&D, right? Implementing some of these really exciting technologies, like being able to apply AI to our database, train the models, and create first drafts of Form Cs and Form 1As with our AI trained on our own data sets. And then lastly, yeah, is looking for future acquisitions across those consumer segments that I already mentioned.
A quick question for me then, Chris. I mean, obviously, synergies are the classic sort of MBA school type idea behind them. I mean, is there anything that worry you about those synergies? I mean, just as some of my background, I used to work for part of GE Capital, right? And in the investment committees and the credit committees and that sort of thing, it was okay. We've got this acquisition, the synergies. 9 out of 10 acquisitions just don't perform the way that people think they're going to perform. How can you, I mean, just give us a sort of a layer of where you really see the sweet spots. I think specifically on the crowd check, because that's obviously where we've come in right now. So just on the real sweet spots from both sides, from your side and from their side.
Yeah, funny enough, this is probably the cleanest acquisition that we've ever done because of just how crystal clear the connection is, right? We have created the software and now our AI enabling the software to create the full structure of these Form Cs and Form 1As and essentially the deal structure of these offerings, right? And we're getting to a place where we're automating a lot of that upfront creation. We have done that at Raise Papers for 3 years. We're growing that business really nicely in the Reg CF space. The spot we haven't been able to win in is in the Reg A plus space. Guess who owns the Reg A plus space? CrowdCheck. So it's literally just like now we can serve you from we're just getting started, we're a young company to we're a later stage company. So it's like the perfect conduit to you worked with us, on our out of the box, easy to use solution. When you're just getting started, you're a simple company. Now you have more complexities and you have more questions and you need more help and support and guidance. Well, that's when you're going to step up into our full service suite at CrowdCheck. So it's literally just like adding a product line with a built-in customer base. So for us, I mean, on the founder advisory side, it makes us the household name on the founder advisory side of the business, from my perspective. And now, you hear these different names, Raise Papers, CrowdCheck, ultimately we see it as the KingsCrowd advisory arm. And likely at some point, down the road, we'll look to kind of rebrand as that as well.
Okay, awesome. So what worries you about acquisitions in general? What's the key thing that you're trying to mitigate?
That's a very good question. So, in past acquisitions, I've learned a lot. Like we've rolled up, boy, I think 6 or 7 companies at this point. The greatest challenge has typically been 2 things. One, if we were just acquiring the asset, not necessarily the team behind it, which has happened a couple of times, the transition is far harder, right? Because you're taking on something that doesn't have someone running it, and there's challenges to that. In this case, we don't have that. This is a fully functioning, running business, right? We're just looking to add BD and technology on top of it. The second challenge that we often find is just, culturally, right? If there's major differences in how they run, you could run into issues. And we've certainly experienced that on the KingsCrowd Inc. side with acquisitions we've done in the past, where we've had to figure out how the 2 pieces kind of fit together, right? In this case, I have to tell you, this business, what they were looking for in an acquisition before I ever said anything was we want to be tech enabled and we want sales support. And those are the 2 things we have to offer in a really big way. So we've just seen that it's a really nice fit. Over the negotiations that took months and months and months, it became very clear to me that this was a team that we can work really well with, and I don't have a lot of concerns around. So typically I would be worried about that, especially when a deal happens quickly and you kind of go, well, let's see what we have here. But in this case, it was such a drawn out process. I really did have an opportunity to kind of get to know these folks. And that concern around culture for me right now is just not there. I'm seeing that we actually align very, very closely on how we think about culture in business and running things. So again, that would usually be my major concern, but I actually feel really comfortable with it.
Okay, so that naturally sort of rolls into the deal structure, right? Because there's been a bit of upfront consideration, and there's a staggered sort of buy-in, if you like, a better way of saying it. So do you want to just talk through the deal structure, but also at the end of the profit share milestone, what happens then?
Yeah, I've worked really hard in this deal to create as minimal liability to our business as possible with as much upside as possible. So the way that we ended up structuring the deal was we had a $500K upfront payment that was funded by one of our key investors that's been with KingsCrowd for many years. And he provided that on a bridge loan where we'll pay him out over the next 6+ months, and is a very friendly investor, lender, so on and so forth. So not someone who's, looking to take the rug out from under us, right? He wants to see us be successful. He's a major shareholder in KingsCrowd, which is terrific. So we have a great partner on kind of that upfront payment to get the deal closed. And we already have almost half of that money raised to pay him back just in the first couple of weeks since the acquisition closed, which is fantastic. So we have that. And then there's a $4 million final payment, right, that needs to be made. That is going to be made on a quarterly basis on a percent of profits to the founder of the business that we acquired it from. So basically, KingsCrowd Advisory Inc., that we stood up to acquire this business, the way that it works is as this business generates profit, we will pay 70% of whatever those profits are until we pay down that $4 million loan. We're expecting around 5 to 6 years for it to be fully paid off. And the way that we structured it is it's very friendly in that, again, it's a founder promissory note. We're not taking this out from an SBA lender or someone who's coming to, take the business, and it's collateralized by the assets that we acquired. But we've encased all of this in KingsCrowd Advisory Inc. with the idea that we keep any sort of liability with the acquisition within the KingsCrowd Advisory Inc. business line, which is wholly owned by KingsCrowd Inc., but is kind of protected within the KingsCrowd Advisory arm. So we've been really thoughtful about the structure to create, alignment and safety and minimal liability with maximum upside. And at the end of the day, right, if we're not producing profits, we're not paying out on that note that then maybe we wouldn't be able to pay off. So it creates a lot of protections for us, especially in the near term as we manage a transition.
So with the continuity at the end of that $4 million that gets paid out, ultimately, what happens then? Because if they all decide, right, we're going to set up CrowdCheck 2, what happens then?
Yeah, the founder has retired and continues to be an advisor to our business and has equity in KingsCrowd that we'll be providing so that she continues on as an advisor. She certainly has no desire to do so. And I will tell you that the lawyers who are on the team are all very, very bought in. One of the reasons why we were such a good fit to be, acquired by was that they all want to continue to just do Reg A, do Reg CF, and be in this Jobs Act industry where they've been some of the innovators of kind of the legal solutions that have been created. So none of them have a desire to go anywhere and really want to be a part of this. And we're aligning them by also giving them equity in the business so that they feel aligned to the mission of what we're creating at the top level.
Chris, we'll close talking about your guys' potential for being acquired. There's a lot of different types of companies I think that'll be interested in what you guys are building, and I wanted to get your honest take on what you kind of see as like your acquisition endgame potential. Do you think that next 3 to 6 years, let's say, who comes knocking? Do you think it is Bloomberg, right? We're talking about being the Bloomberg for private markets. Do you think that it is Bloomberg? Do you think it's like a Morningstar? Is it one of the the Reg A platforms, Reg CF platforms, like WeFunder, Start Engine? Who do you like? Who's, what are your thoughts around like who would be like the optimal buyer of KingsCrowd?
Great question. I mean, it's very clear to me that an S&P, a Morningstar, a Bloomberg, a Thomson Reuters, as this market gets big enough, we become a very attractive acquisition candidate, right? People always say, are you worried about those incumbents building something in this market and competing against you? And I always say, no, I'm more worried about the guy in a garage or in college right now thinking about building in this space. The big guys, they could spend tens of millions and not figure it out. What they ultimately like to do is just buy, right? Buy rather than build. So I do believe some of them will come knocking on the door. It's a natural extension. If you're bought into our thesis that the private markets become mainstream and, private, public, that all starts to blend, right? You don't think much of the differences between private and public, then they're obviously going to want to be in this category and own a company that's doing things in this category and owns the space. So I absolutely see them being a natural acquirer. In terms of the platforms, WeFunder, Start Engine, I think there probably actually is some interest from some of those platforms. I've just never believed that having a third-party rating agency, right, and a data provider and an investment or founder advisor firm makes sense to be bolted on to a platform, right? It just doesn't fit. It's clunky. The whole benefit and beauty of our business is that we sit at the center of this universe and can literally help you identify the opportunities across the entire spectrum. We never want to be limited or looked at as providing limited, views because of who we're owned by.
Well, they would want that though, right? Like they would, because they want to control
sure,
the data that's on their platform, but that may not be in your best interest, and they may not be able to pay enough to, warrant you guys limiting yourself to one platform.
And at the end of the day, the way we're really going to advance this industry is not to continue to speak to ourselves who are already in this industry. It's to work with someone like Bloomberg who could take us to the masses, right? And say, hey, Wall Street, we now provide this solution, right? That's how we really start to grow the market, is go beyond our own walls. So from my perspective, it wouldn't even make sense. For me, the Bloomberg Morningstars, that's where it makes sense. And look at Morningstar's acquisition of PitchBook. It's been an extreme success. Data businesses are highly, highly, highly lucrative, and doing it in really hard spaces that no one's tackled yet become extremely valuable to these larger data entities.
Yep, absolutely. And when you talk about like the mainstreaming of alternative investing, man, I mean, I struggle to think of companies that have done more to really progress it than you guys. You're one of our favorites. And I want to say thank you for helping all this stuff go mainstream, man. So thank you so much, Chris. We'll leave it there. Thank you very much, Chris and Tim.
Thank you, guys.
Thanks, gentlemen.